All right, hello everyone. Welcome to another episode of Trading Bitcoin with your host Tone Vays. Though we are probably going to spend a little more time talking about the traditional markets, which to me have lost a little bit of a sense of reality. Yes, we had the unemployment claims come out this morning. Apparently, 2 million people have found employment, and not exactly sure how, since everything is still closed, at least in the major cities. Hope the stream is coming through well. Hope the audio is good. Looking to improve all that over this summer. And yes, I am using the right microphone. Just redoing my entire operation. Also rethinking how I'm going to restructure the educational section of tonevays.com. All right, let me grab your chat and we will be off to talk about the charts. All right, here we go. Let's do it. Let's go to screen share. All right, as usual, if you like to support this here YouTube channel, the best way is, of course, to use the affiliates. If you're going to be subscribing to TradingView, or you need a Bitcoin debit card, or you're going to be doing social trading, please check out Tone Vays affiliates. All right. I want to point out a few articles. Galaxy, if you haven't read this report from Mike Novogratz's Galaxy, really, really good. Check that out. It's the reply to Goldman Sachs. Also, before I forget, this article from Exponential Investments, which is the investment fund that Leah Wald is a part of. So this is where she moved on to after the unfortunate ending to Lucid Investments due to Tyler Jenks's passing. So check it out. I'm going to reference a couple of things from this article because it's really, really good, especially this chart when we get to the S&P 500. All right, let's go to the markets. Let's look at Bitcoin real quick because nothing interesting is really happening in Bitcoin. It continues to consolidate. As you can see, the hyperwave wave 7 rejection is still going on right now. We are sitting right at resistance. We are toppy based on momentum indicators, and there is a possibility that this will pull back further. I left my red arrow right here. My red arrow is approximately where the price is right now. So I have not yet ruled out a more significant pullback in the price of Bitcoin. And one of the reasons I am still anticipating a significant pullback in Bitcoin is because I'm still anticipating a pullback in the general stock market, which we'll get to in a minute. Here is the weekly chart of Bitcoin with actively live prices. You can see how the CMF on Bitstamp has been completely non-existent. So the volume is drying up a little bit and not that much. I mean, I don't really need even to look at the volume indicator. I'm pretty sure the volume is not great. Let's see what it looks like. The volume is not that bad, actually. Thought it would be a little bit lower on Bitstamp, but it's definitely lower than it was last month. So the volume is kind of starting to pull back. Let me drop the volume here. Okay. So same thing. I think this is a reversal candle. It is happening at trend line resistance. It is also happening along with a potential 9 sell. So I will take it easy right here with the markets. All right, the daily chart. I updated my triangle from a symmetric triangle to an ascending triangle. Either way, this is calling for a potential breakout, but not yet. This triangle is still too early. I probably should delete it and then redraw it, but I'm being lazy. I'm going to leave it for now. But if we break above, then this triangle no longer functions. This triangle is only good if we come and test the bottom side of this triangle one more time and then rally to the upside. Let's look at the 4-hour chart. The 4-hour chart continues to pull back. This has gone beyond just a 4-candle correction with more upside. So now I am looking for a slightly more significant pullback on a 4-hour chart, potentially for another 16 to 18 hours, maybe the next 24 hours, a bigger pullback, maybe touch this bottom side of the horizontal channel one more time. GBTC premium, I have it at 20%. These are my formulas. I still need to update my formulas a little bit. Just been a little bit busy. You can also check the GBTC premium because my premium tracks it over time, which is important. Also, last time on our show, we checked out the Clark Moody's dashboard, and they also give you a GBTC premium at 26%. This is the more accurate current one. I'm sure they're just, I don't know if they're using the latest numbers or not, because the number updates every day, but I need to track that number historically. So I need to get with my developers and get ours is going to be right. But I'm also not sharing these formulas anyway. So this is mostly just for me. Bitcoin dominance is still at 66%, not really going anywhere. And the Bitcoin hash rate, still keeping an eye on that, not really moving all that much. Oh, whoa, hold on. There we go. Not really moving all that much, but I like the fact that it's staying up there. So that's good. Gold is getting crushed. Gold is getting completely crushed because, like I've been saying for the last few weeks, gold is the complete negatively correlated inverse of the S&P 500. So if the S&P 500 is going to the moon, gold will not do well. But after the initial big crash, when gold crashed along with Bitcoin, ever since the run up over the last few months, I've been saying how at this point, gold and the S&P will start to become negatively correlated. So every day that the S&P goes up, gold probably won't. Every day that the S&P goes down, gold probably will. Now, S&P's been rising. I wouldn't exactly say gold's been dropping, but gold's been consolidating. Technically, gold has dropped. So gold has dropped from the highs of April 14th down to the lows today for 6.5%. So if we look at the S&P from approximately that area, we cherry pick the high and the low for gold. So let's use the same dates for the high and the low for the low and then the high for the S&P. So let me see here. This was April 14 up until today. So if we go to the S&P, let's go to the daily chart of the S&P. And now we need April 14, which is probably around here. Nope, here. Nope, here. This weird candle. So I don't know, that's a big range. Let's split the middle here. I don't know if I should use the bottom of that day or the top of that day. And now we go to today, and S&P is up 14% in that time. So gold is down 6%, 6.5%. S&P is up 14. So the S&P is up more than 2x or almost 2x. If we use the end of day of that candle, S&P is up. What's going on? I got a new mouse, and like it's good because it saves my hand from carpal tunnel, but I wish it was of better quality. And that really bothers me. You know, someone patents really good technology, but then they can't actually execute on it. And now I'm stuck with like a shitty cheap mouse, but it's ergonomically perfect, which is annoying, by the way. If you can't get your patent right, like let somebody else build it, and just take a little fee for your intellectual property. All right, frustration over. Okay. So, okay, so where are we here? So I'm still a believer that on a weekly scale, we should be topping this week, and this week is clearly a blow off top. Here's my problem. This is not a reversal weekly candle by any stretch of imagination. Like even like the Craig Wright's delusions will not turn this candle into a reversal candle. And I really need my reversal candle. And therefore, this is, if we close the week up here, and the week's going to close in about 4 hours. So if in the next 4 hours, the S&P does not crash to 3,100, if the S&P does not crash 100 points in the next 4 hours, which I kind of doubt that it will, but it would be interesting if it does. So unless the S&P crashes 100 points in the next 4 hours, this is not a reversal weekly candle, which means I am bullish going into next week. On a daily scale, the daily scale is now near the all-time highs. It has one last gap to cover. And you guys know my views of the all-time highs. If the S&P gets anywhere near of a sniff of the prior all-time high, it's probably going to break out and potentially double in price over the next few years. So I've been bullish the S&P 500 in forever. This coronavirus like made me look silly because I've been so bullish on the S&P 500 the last 5 years, and I've just been making fun of anyone that wasn't in the S&P 500. Then we get the crash for legitimate reasons, and now we have no businesses operating. The economy is complete shit. I was bullish because of the oversold condition, but I became bearish since like this area here, 2850, 2900. I've been a huge skeptic of the rise of the S&P 500. This is like the longest bearish stretch I've ever been in the S&P 500 in 5 years. And it's kind of making me look like a fool. But then again, we have like charts like this. And I'm looking at this and I'm like, what the hell is that? Like consumer spending is like I think the lowest it's been in like a lifetime. And somehow personal income is the highest it's been in a lifetime because no one is spending. Everyone is saving. No one has anywhere to spend on. People have lost their jobs. But if personal income is calculated by those that still have their jobs, then that's what's skewing it, right? Because I got to see how the statistic is calculated. Because here's an example, right? Suppose you live in a really nice, fancy building in Manhattan, and here are the people that live in that building. Like a high-end financial manager, and a high-end chef. Let's name 2 more people. You have a fancy building, and here are the people that are living in that building, and like you have a chef, you have a financial analyst. Let's get 2 more jobs. You have a retail store manager, and let's name 1 more that would have lost their job. Let's say a truck driver. Truck drivers actually make pretty good money. My uncle's a truck driver. It's not great money, but it's definitely better than sweeping floors. It's a rough job. I wouldn't want to do it. Most dangerous job not the most dangerous job in the world, but it's being a truck driver is in the top 10 most dangerous jobs all the time. That's why it's not a great job. I wouldn't want to do it, but you can make decent money with that. So 3 of those people probably lost their jobs. There's no goods being shipped around much right now. Everything is on delays. The chef isn't working because there's no restaurants, and the retail store is closed. So the only guy that's working is the financial analyst. So if the financial analyst was making twice as much money as the other 3 people, and those 3 people lost their jobs, personal income could get skewed based on the guy who's still working because he was making a good salary and he wasn't affected from his job. Some of the live shows saying strippers lost their jobs too. Yeah, they did. I agree. Universal income, that's more money for the useless. Yeah, I agree. Look, this is a disaster. Also, as this article points out, a lot of people use their stimulus money and their savings to start trading in the markets, which is also insane. And here's another thing I've been saying when the COVID thing was happening. It was a really bad idea to hand out money. It was a really bad idea to extend all this unemployment. The better way to handle the situation would have been to cancel people's bills. Cancel their bills. Allow them, tell the banks to hold off. Hey, 3 months or even 6 months, you don't have to pay your mortgage. You don't have to pay your credit card. It doesn't mean they're giving you free money. It just means they're going to hold it. They're going to freeze it. They're not going to charge you interest. You have 6 months where you don't have to worry about bills. You'll still have to pay your electric bill. You'll still have to pay other bills. But the government could have supported the banks and said, hey, don't charge people interest. Let them not pay their mortgage. And the same thing happens if you own a place and you have a renter in that place. The banks can say, hey, you don't have to pay your mortgage on your place, and the renter will get a break on his rent. So I don't think the renter should get 100% free because there is a profit there. So the renter gets a 75% discount on their apartment because the owner, if he has a mortgage, doesn't have to pay it for 6 months. So the owner of that apartment or that house doesn't have to pay his mortgage bill. And that's why the renter gets a nice 75% discount on rent for the next 6 months. That's the better way to handle the situation versus handing out money. Because if you have less bills, that's less likely for you to go and gamble in a casino. And it's a lot easier to, like a lot less government resources and money gets wasted in doing that. Do you know how much money it costs to send out stimulus checks? And then a lot of them got faked and stolen, and it's a disaster. Someone is saying that's what the Philippines did. Really? I had no idea. That would have been a much better way to handle it. Where did the money come from? The money got printed. What do you mean, where did the money come from? And that's what I mean. If you, allow people to hold off on paying their bills, you don't have to print any extra money. All right. Any good questions, guys? Yeah, we got a few questions. Because my market analysis is done. Yeah, but check out this article. It's pretty good. The Nasdaq is at an all-time high today. How do you compare that to the SPX? Well, that actually makes sense. I had no idea the Nasdaq was at a new all-time high. I have not looked at the Nasdaq in a while. That's crazy. Look at that. Nasdaq is at a new all-time high. Well, I mean, look, the reason why it makes sense is because if you look at the composition of the SPX and here, SPX pie chart breakdown. I had one of these on my own. Let's go to images. Okay, so this is actually bullshit. This is, I actually saw the guy that, I saw a tweet from the guy that wrote this article, and I actually called called them out. This is like a socialist elitist view of the S&P 500. The guy, it's a really, really nasty way of hating productive companies to write an article like this. It is really bad. So here's what this person did. There was 150 S&P 500 companies missing from this chart. So he removed 150 companies and then compared the bottom of the barrel of S&P 500 to the most productive companies in the S&P 500, the top 6. Okay, that's not what this chart looks like, which really bothers me when people do that. And that's the chart that's freaking everywhere. So if you really want to know the components of the S&P 500, you need to make your own. And because this is the chart that dominates due to socialist agenda. And yeah, I said it, socialist agenda. I hate people that do this kind of bullshit. So this is why it's impossible to get a real breakdown of the S&P 500 because people do bullshit charts like that. And the only way to do it is to now go and compose it for yourself, which now I got to go into my own computer and find it. Because if you believe all of these garbage articles, you're not going to learn anything in the world of finance. God, that's so frustrating. Let me go to pictures. And this is the chart that dominates everything. So you can't even get a legitimate chart of the breakdown of the S&P 500. But it's important to explain why the Nasdaq is at a high and why the S&P is not. I'm sorry, guys. Hold on. All right, found the picture. Let me see. May take a little while to load. It's a very data heavy picture. So it's like, I made this joke last time I was pulling it up. It's like waiting for pictures to load in the mid 90s. And we're not going to discuss what pictures those were being viewed on the internet. Yeah, it's a socialist agenda to demonize productive, successful people. It really is. As long as you earn your money fairly, I don't have a problem with it. Look, we can be angry at Facebook and Google's, privacy stance, as in they don't have any stance on privacy, but that's a different issue. That is a different issue, whether Apple or Amazon or Google or Microsoft have built successful companies. They've built successful companies. So this will take a little while. But the point is, look at the S&P 500. Tech company, tech company, tech company, tech company, tech company. So all of these companies, Microsoft, Apple, Amazon, Alphabet, Facebook, they weren't affected that much by COVID. Apple was a little bit. Their stores are closed, but you can still buy their stuff online. Johnson & Johnson probably benefited a little bit. People buying wipes and all this other stuff. The toilet paper shortage. Can we make fun of everyone running out and buying toilet paper, which was insane? But after that, you're going to see Disney here. And Disney's been closed. And Disney's not filming. They're not making new series. Even their TV channel is going to suffer. They're going to take a step back. So the S&P 500 runs out of tech companies real quick. And now, Visa is probably getting hurt. A lot less people are spending. Visa makes their money from fees. People are not going to be paying their Visa bills. They're going to start defaulting. Intel could have issues as well. I know they're a tech company, but a lot less people are probably going to be spending on new computers, new chips, chip development, supply chains. I don't know if this is good or bad for United Healthcare. They are an insurer, and if people start defaulting and not paying their bills, this is not a good time for insurance. By the way, insurance companies do not benefit in disasters. Okay, insurance companies are profitable. Your car insurance company is profitable from their people that pay the premium and never get into the accident. The insurance companies are not profitable from those that get into accidents. So health insurance companies are actually more profitable from a healthy population, not a sick population. Hospitals are more profitable from a sick population, but insurance companies are more profitable from a healthy population. Okay, if you think they're profiting because they're charging your cousin who's a smoker and is in bad shape, and they're charging him 3 times more money, you think they're making their money off of him? No, they're making their money off of you. The healthier you are, the less likely you are to use their services, and it's less risky profits that they make. Home Depot, probably not. I don't know. I think they're open, but how many people are going? Maybe Pepsi is probably not doing as well. People are trying to get healthier. The best way to fight Corona is to get healthier. So probably not going to be drinking Pepsi as much. So you start to get into, wow, I didn't know Netflix was so far down. Thought they were bigger. So when you start to go down the list, this is a look at the S&P 500. This is bullshit. So like Market Watch, I honestly, no one should read you if you're going to post charts like this, and then people are posting them all over the web thinking this is what the S&P 500 looks like. It's so frustrating. And then you try to Google for a pie chart, and all you get is these. That's all you get. All you get is like these improper pictures because someone with a socialist agenda to redistribute wealth decided to write an article for Market Watch. So frustrating. I want it on the big screen over here. So freaking frustrating. You have to build your own, and then you got to wait for it to load for an hour because it's data heavy. This is the S&P 500. This is what it really looks like. So Microsoft is only 5%, not this insanity of wherever they have it. Like, it's not even accurate. Like Microsoft should be up here anyway. Well, I mean, maybe Apple was at the time. This was a 2018 article. So Microsoft's now bigger than Apple. Back to being bigger than Apple. Anyway, let's get back to this. So the reason why the Nasdaq is at a new all-time high, wow, totally spaced on my point. The reason why this is happening is because the Nasdaq is the tech sector. They were the least affected by the global shutdown because they don't have physical stores. Okay, Google doesn't exactly have physical locations that needed to get shut down, and their most productive employees have always worked at home or are happy to work at home. So the tech companies are doing really, really well because I mean, again, I didn't expect it. I expected the markets to pull back, I'll admit. But look at this. That is a potential weekly high. I got to get this update released one day. So if we go to the weekly chart, that was the daily chart. Here is the weekly chart. And look what happened, right? I didn't even realize that. Wow. Boom. 9, 9, 9, and 9. Okay. So look, I'm not frustrated. I'm always happy that the stock market rises because that means that people have jobs. But at the moment, this makes no sense to me. It makes sense why Nasdaq is outperforming the S&P, but telling me that the Nasdaq deserves to be at a new all-time high in this environment when I'm watching, videos of looting left and right every evening. It's bad. It's really bad. Like I can't explain it, guys. I'm sorry. I'm still waiting for my pullback this week. Look what happened last time. Last time, same thing. Look at the candle, is almost identical. And then the next day we rise up a little bit, we make a new high, and then look at this disaster. Look what happened. So I'm gonna stay patient. The older you get as a trader, the more patient you get. Tone, could you make a show? Sorry, I have to read this question. Tone, could you make a show that shows people how easy it is to run and install a full Bitcoin node? No, it's not easy. It's actually not easy. Unless you want to watch me for 24 hours again, almost electrocute myself setting up a miner. That's exactly what that would look like. Though there's no electricity involved in setting up your node. I'm sorry, guys, it's not easy. I'm not going to lie to you. Setting up a node is not easy. But I do want to do a show about that. I am freaking tired of seeing people scaring others away from running nodes. No, I'm not scaring you away from running nodes. I'm just saying that I'm sorry. I've set one. The last time I set one up was a few years ago, and it was not easy for me. I'm going to try it again. Maybe it's easier now. And yes, I do want to make a show about that. Oh, okay, I'm getting reports that Home Depot has been packed since lockdown. Yeah, I can see that. But people aren't exactly rebuilding their kitchens right now either, right? So it's not about the quantity of the people in Home Depot. It's about the quality of the things that they're buying, right? So how many people are replacing the refrigerators, their I don't know, stoves, buying up new grills? I'm sure it's packed. People trying to buy masks, and I don't know, maybe some plywood and a hammer to prevent people breaking the windows. So it also depends on the quality of the value, the high-end market that they're buying from Home Depot versus not. Wow, getting a lot of questions here. Yeah, but anyway, back to this. I'm not chasing. I am not chasing. I will wait. I'm at least a 1 to 4 week correction. Give me a 1 to 4 week, give me a normal stock market here. Like here's an example. Here was a potential buying opportunity before all this shit happened. And yeah, it didn't exactly work out. And here's a double version. Here's a double nine. I like double nines. This one did not work out. This one worked out for a 1 to 4 candle correction. At least it didn't kill your trade. This one worked out very nicely. This one didn't work out nicely, but you shouldn't have lost much. That's why I say that's why God created stop losses, but you guys get the joke. This short trade would not have worked out, but this one would have made up for it. You could have also gone long afterwards. Though this was a different situation. If this was a normal environment to go long in, this is not for me. And here's another double. I love the doubles. I didn't even realize that was a double. Wow. That's a good example. Beautiful example of a double nine. Yeah, so I'll wait for this. Should probably tweet this out. Looks beautiful. Doesn't mean it's going to happen the same way, but something to keep an eye on. Thank you for pointing me to the Nasdaq. This isn't even the Nasdaq, and this is NDX, but I like NDX over the Nasdaq. Hey, maybe Home Depot is killing it with people fixing their houses more. It's possible. It's possible. Not going to rule it out. As we have 1,000 live viewers, guys, thank you for watching. Hey, if you like it, if you agree with my analysis of S&P versus the Nasdaq, please hit the like button. We have 1,000 live viewers. We have 150 likes. Come on, guys. Hit that like button. The video spreads around the web. Yeah, if anybody watched the stream of me setting up a miner, it was pretty funny. I was very frustrated. But guys, I have a lot of respect for miners, but that respect is in the physical form. So I have a lot of respect for miners for the hard job that they do of the physical labor and the insanity of maintaining a giant warehouse of a bunch of mining equipment. Having said that, it's also the same respect I have for truck drivers, okay? Where it's the number one employment industry in almost every single country in the world, including the US, is driving, transportation, I think. We can Google that. Well, how do I Google this? Hold on. Industry, no. Man, employment categories. Employment categories ranking. I'm not even sure what I should be Googling here. Jobs by percent of population. Jobs by percentage. American jobs by percentage. Beautiful. There it is. We're going to be American centric here. All right. Government. I hate going to government side. BLS. Bureau of Labor Statistics. Employment by detailed occupation. Beautiful. 2019. It's not that old. 6 months ago. Not much has changed. Well, a lot has changed, but oh, Jesus. I want to see like a pie chart. I don't want to sift through that. Let's go to images. Ah, beautiful. Let's see. All right, what do we got? Nope, not what I was looking for. Jeez. I think you guys get the point. I'm getting into the weeds on this. Nope. Where's driving? Where's transportation? It's not even on here. That's weird. It's got to be a subcategory. Anyway, you guys get the point. Transportation for most countries is one of the top one, right? So look, I respect truck drivers. Like I mentioned earlier, very hard job, very intense job. You know, you're driving cross country, especially in a big country like the US. And it's a difficult job. But, and here's the but, there is a difference between a truck driver that's doing manual labor, and then there's a difference between the engineer that is trying to kill that job by creating self-driving trucks. And it's unfortunate that the truck driver is going to go away as a profession, but the engineer is going to make this job safer, it's going to make it faster, is going to make it more efficient, and is going to make it cheaper for everyone. Because if your goods can get delivered to you cheaper, you pay less money. So the world benefits from the engineer trying to eliminate the job of the truck driver. Now, let's move that analogy into the realm of Bitcoin mining. I respect Bitcoin mining operations the way I respect the truck driver for doing the job that I would not do. I mean, for enough money maybe, but not at this point in my life, right? When I was younger. So, but that miner is paid to do the job. The truck driver that is driving the goods from one to the other, he isn't tasked with logistical thinking of the best way to get those goods. His job is to just drive the truck based on GPS or based on, he has a little bit of say of how that truck is driven. When it comes to Bitcoin mining, I respect them for the job that they do, but they are not paid to think about the protocol. And this is why we had the big block disaster, because miners decided to take control and think about how big the blocks are. It's not their job. It's not, the Bitcoin would die if you give it to them, okay? So miners' job is to be a hammer, not to think. That's the engineers. You leave that to the engineers and you leave that to other people, not the miners themselves. And that was the problem, that some people decided that miners should have the dictatorial say on the block size, which is not their job at all, okay? Their job is to plug in mining equipment and cool it properly and collect a reward for it. And I understand how hard that job is because I've tried setting up a miner. So I don't want to like denigrate the miners that their only job is to plug in a computer and they're done. But plugging in that computer is incredibly challenging and difficult. Okay. We got a bunch of questions. All right, let me go to the actual like pre-selected questions. And thank you for your contribution. Peruvian Highlander. Oh, awesome name, man. I love the show Highlander. One of my favorite shows as a kid. Loved Highlander. By the way, the Understanding Bitcoin conference theme is inspired by the show Highlander. And it was perfect with the lightning. We're going to redo some of this now that lightning is more prevalent. And yeah, there is this is definitely Highlander inspired. One of my favorite shows. Can you please glance at the miner profitability chart? Nothing's changed there, guys. Nothing's changed in the miner profitability chart. Hey, the market's pulling back. How about that? About time it's pulling back. Didn't exactly top where I would have been nice to have a 9 there, but oh well. Well, the spirit of the situation definitely had the 9 there because of this one. I actually would have had the 9 here one earlier. But yeah, let's see what happens. Let's see what happens over the weekend. I just can't see the S&P going to new all-time highs. That's just crazy. Guys, I can look at the miner profitability chart, but it's not interesting. It's just not interesting. Miner revenue. There's nothing interesting there. All right, let me get to the pre-selected questions by my awesome volunteers. I was expecting a retracement before moving higher, looking overbought on time frame. Yes, I agree. Me too. 1,000 live viewers. Yes. Awesome. Oh, we dropped a little bit. Could you take a quick look at Apple? Yeah, we can look at Apple. I mean, miner profitability, it's not interesting unless it breaks this or comes back and touches this. It's just not interesting, like I said. All right, so while Apple pulls up, Apple and Home Depot are at new all-time highs. Wow. I guess I'm wrong. Home Depot is doing really well. I'm not sure why Apple is doing so well. Well, this is the weekly chart. Look what's happening to Apple next week. potential top. I can't explain it. I don't know how people have the money to buy a new Apple phone right now. Maybe they use their $1,200 to buy a new Apple phone. Let me look at rig. It's one of those cheap oil plays. Whoa. Whoa. I almost want to gloat because well, if you were in my options workshop and you're why, I'm actually going to send a message to them right now. I'm sending a message saying, who was in rig? Because I still am. Well, at least one of my trades worked out because the S&P short sure as hell didn't from earlier this week. Yeah, so I'm in rig with something called a call ratio back spread. For those that don't know, call ratio back spread is an incredibly super bullish strategy. So here's Investopedia. This is a strategy you put on when you are insanely bullish looking for a breakout. Call ratio is an option strategy that bullish investors use if they believe the underlying security or stock will rise by a significant amount. So there you go. That is what you do. Wow. The good thing I had no clue because I haven't opened my trading account yet today. I would have been like, what the hell happened? But yeah, that's nice. So I got into it like back here. I was very frustrated with it too. I'm like, damn, this thing used to break out to like $4 or $5. And yeah, right off of this area, right off these earnings here. It was soon after the options workshop, and the options workshop was at the end of April, I think. So this was beautiful. Nice. First thing I'm doing, I'm gonna open up my trading account after this. That's why I looked at rig. I saw someone mention rig. I'm like, oh, you know what? I should keep an eye on that because I was getting so frustrated right here. Because like I said, this strategy, if you read about it, and I teach these strategies. Like there are strategies for when you're super bullish. There are strategies for when you're a little bullish. There are strategies for when you're neutral. And that's the beauty of options. The beauty of knowing how to trade options is not only because they have that element of time, they let you pick the perfect strategy for what you think the asset's going to do, while at the same time lowering your risk if you use them properly. Yeah, WLL was a stock I was going to enter, but then there were like some bankruptcy issues that I didn't touch. It was just too cheap. Like this was borderline too cheap for me to enter with options. Yeah, there was something wrong with WLL, and I didn't enter this trade. It looks like it would have done well. I don't remember when. I know Joe Sass brought it up to me. And see, my problem with WLL was when I see stocks that were hundreds of dollars in price, or almost like, yeah. See, when I see stocks that were 400 and now they're $1, that's a problem. Like, I just don't think that company is ever going to recover. There's a reason why it went from 400 to $1. But rig was different. With rig, yes, it also went to $1, but this was never a $400 stock. It was always reasonable. I don't think it was ever a $30 stock. Maybe it was at the height, right? But here I'm scrolling back in a similar fashion, and I got to go back even further. But you see, rig's it was never 400, and I already scrolled back way further than I did with the other one. So the idea that rig is at $1 and then going back to the $5-6 range, or like at least to the bottom of this channel, was very reasonable to me. And my trade makes a good chunk of money. Like this is where my trade really starts to get profitable as a call ratio back spread. It's a very advanced strategy. It's only meant on very bullish plays. Like I got in around $1 and I'm not even making real money until it breaks 250. Like it has to go over 100%. But now if it goes up another $1 or $2, that's when you're golden. And this is almost a zero risk strategy. If the stock continues to tank, like if Rig would have went out of business, I actually still would have made money. The only way I lose money is if, like in November, it's still a $2 stock. That's when I lose the maximum amount of money. Anyway, I will be teaching another options course probably at the end of the year. And I got to get the testimonials from all the other people that took my options course because I know some of them are doing fairly well in their trading endeavors. All right, back to questions. Tone, how is it dangerous because of muggers? No, it's just a dangerous job. It's always ranked up there. Like driving is dangerous. Your chances of dying are a lot greater. Like if you compare your chances of dying in a car to your chances of dying from, let's say, police brutality, like they don't even like scale. You put them on a pie chart, you're not even gonna see one. It'll be like 99.9% driving related deaths versus death by cop. So, and if you're a truck driver, you are driving more than you're sleeping. So your probability of death significantly rises. That's why it's dangerous. Not because of muggers, no. Anyway, governments can kill the Bitcoin blockchain. Short answer, no. Long answer, they can make Bitcoin be a pain in the ass to use if they A, coordinate and ban Bitcoin, or B, start changing laws to give you more freedoms, making Bitcoin irrelevant. I'm not really anticipating B. But A is possible. It'll just be more frustrating to use. Do you think ledger wallets are a good option, or is there a better alternative? Look, all hardware wallets are better than no hardware wallets. There are 3 hardware wallets that I have personally used: the Ledger, the Trezor, and the Cold Card. I find Trezor the most user-friendly, but of the 3, Trezor has the worst reputation for security out of the 3. Still has way better security than anything else outside of the hardware wallet space. Cold Card has the best reputation for security, not the most user-friendly. Therefore, it's up to you. What's more important, ultimate security or decent usability? I still really like the Trezor. But I also love my Cold Card. The Ledger is right in between. And here's why, don't let me discourage you from getting a Ledger. There's nothing wrong with the Ledger. But to me, the Ledger is not the most user-friendly. And Cold Card, I consider the ultimate in air-gapped Bitcoin security. So I'm either going with the Trezor for its user-friendliness, or I'm going with the Cold Card for its ultimate security. And once again, I'm going to shill the Tone Vays affiliate page. Oh, I took down the Trezor one because I don't think it was generating anything. But on my page, there is a Cold Card link which is not even an affiliate, actually. I don't actually get anything back. I just like the product, and I'm friends with Rodolfo Novak, and I just support them. I don't get anything for this. So I support Cold Card. I also support Crypto HW Wallet, which is a trusted reseller of their products. And I had a Trezor. I cut down on my affiliates. It was too many. And I took away the exchanges. Maybe I'll bring them back. We'll see. Anyway, I find this to be the ultimate in security, but I find Trezor to be the best usability. It's up to you. It's up to you. They're all good. I don't use the ledger, but it's fine. You can use it. Tone, are you not expecting profit taking before next leg higher? What can you expect? I don't know, guys. Look, the S&P is out of control. I can't explain this. I'm sorry, I can't. I cannot explain this. I'm still waiting for my pullback. The TA's been calling for a pullback. Reality's been calling for a pullback. But if everyone is going to spend their unemployment money buying up stocks, it can go higher. The Fed's going to keep printing money, it can go higher. I'm going to stay patient and I'm going to wait. You know, after 5 years of being a stock market bull, I think it's okay for me to not be a stock market bull for 6 months. American Airlines. So I was long in American Airlines. I was selling covered calls, making decent money on that, but they got called away from me. So I don't know how it's doing now. I'm no longer in this stock. So did they go up? Did they go? I'm sure they went up. Everything went up. Yeah. I mean, I bought into American Airlines when Buffett got out. Ironically, see, this is why people made fun of me. The moment I saw the news over the weekend, I forgot which weekend it was. It might have been around here or back here. I don't remember. Buffett gets out of American Airlines. The first thing I did on Monday is I got in. But I was selling covered calls. And my covered calls were right here. So this is the weekly chart. Wow. No, it's the daily chart. So when did the weeklies expire? The Mays expire? May 20th or something? May 19th, right here. So my American Airlines stock was called away from me. So I initially was buying here, selling the $11 calls, then $10.50 calls. Then I was selling like weekly calls. And eventually I was selling the $10 calls. I made good money on this. I was selling $10 calls and the stock got called away from me. So I wasn't in the stock to get this, but that's wow. I wouldn't buy in. It's too late. Should have bought it. You should have been in. If you weren't in, go find other opportunities. You know, I was in rig for a while. I mean, my target on rig was $5, halfway there. You know, halfway there. And I got in here at $1. I got in right around here, right off of right around these earnings. I mean, I didn't mind buying rig into the earnings. I mean, how far can it possibly fall? It's already a $1 stock and it's a giant company. So I was comfortable holding this through earnings. I got to double check when I got in, but it was around this 9. Yeah, my target was $5. My target was the bottom of this channel, $4, $4.50. I'll be happy with 4. Check HW Cabo wallet. Guys, I can't recommend wallets I'm not familiar with. I know some companies are sending me wallets. They're new hardware wallets. But I'm not ready to promote them yet. Because I need like people like other people that are more tech savvy than me to vouch for the security of those wallets. I can't. Let's go back to Bitcoin. We're almost an hour in, or we're an hour in. I need to end this soon. But please support with the affiliate page. Embly's supposed to have their new website finally launching later next week, I hope. The issue with gold as money has been that it's impossible to use it for daily transactions. No, it's not. No, that's a misconception. It's not impossible to use gold for daily transactions, but the gold will have to be centralized, right? So you were using gold for your daily transactions in the 1930s. The banks were holding the gold and you had paper money backed by gold. Paper money backed by gold is gold. So no, that's a wrong statement. It is absolutely possible to use gold for daily transactions, especially in the age of the internet. E-gold in the 90s allowed you to use gold for daily transactions. There's nothing wrong with that. This is what made your silver useless. Now, so that's a huge misconception. Doesn't Bitcoin face similar problems? No, because there is no problem. You can use gold for your day-to-day transactions. It's a political issue why you can't use it. It's not a technological issue. Again, gold has infinite transactions per second in centralized form. Because if you're going to actually use gold in the physical form, you can't use it for transactions because you won't be able to buy your cup of coffee with gold. 1 gram of gold is too expensive. Someone still holds 10,000 e-golds. How much was that worth at one point? Right, even Peter Schiff will use digital gold. Of course he will. Does it have any role apart from a store of value? Well, yeah. I mean, look, Bitcoin is used all the time. Hence the Embly card. My wallet's not in my pocket. You want to spend your Bitcoin? Get an Embly card. They don't have it yet, but pretty soon they will let you store Bitcoin on the card. Like that, literally, right? You're storing Bitcoin in a wallet and you're not actually, it's denominated in Bitcoin. And then every time you swipe it to pay for something, that's when it converts to the dollar. Or the Rand or the Euro, it doesn't matter. It works globally. Saved my ass in South Africa. Couldn't find a bank to exchange my dollars. Thank God I had this. I was able to pay for shit. Hi, Tone. HTZ filed for bankruptcy. Look, I'm not an expert at stocks and bankruptcy. That's not my specialty. I don't deal with it. The moment I even hear rumors of bankruptcy, I find other stocks. That I don't have a specialty in trading bankruptcy. I have a specialty in trading earnings, but I don't have a specialty in trading bankruptcies. Yeah, I'm not. I don't understand corporate restructurings. That's not my specialty. That's Trump's specialty. Having a company file for bankruptcy and then recover the company. That's not my specialty. High Tone, could there ever be more than 21 million Bitcoin because of exchanges? Not because of exchanges. What if exchanges start printing fake Bitcoin on their exchanges like banks? They wouldn't be Bitcoin. That's the point. So it's like saying, can banks print more gold because they are creating more fiat money? No, you can't create more Bitcoin. Mt. Gox had this. I mean, and then the Mt. Gox failed. So if an exchange does this, the exchange will eventually fail. All right, and we got a few tip questions. And then I got to call it, guys. Tone, watch OBV breaking on the weekly. BTC November 2015. Really similar to now. Yeah, I believe that. I believe that. Yeah, keep an eye on OBV, guys. What stops us from having fractional banking with Bitcoin and we still end up with inflation? Again, nothing. So if you go to my Twitter, Just want to point something out. It's not a secret. I hate the company blockchain.com. I can't stand them. I wish that company didn't exist. I think they have a shitty wallet. I think they are bad actors in the space. I think they are spamming the mempool. I have been telling people not to use blockchain.info wallet since 2014. In 2014, I recognized not to use their wallet. And unfortunately, they are still the most popular wallet. I really don't like it. So here is me, once again, giving shit to blockchain.com. Because their CEO, who promised SegWit in 2017, still hasn't done it, writes this: you've earned interest on your Bitcoin. Cha-ching! Interest on Bitcoin to the tune of 4.5% or whatever it was. Okay. Now, that's going to be, I can't wait for that to end their company, to be honest with you. So, really like these tweets. Thank you, WooCoin. Though I hope that's not a shit coin. But you follow me, so that's good. Provided some more clarity. You grant blockchain the right, subject to applicable law without further notice, to hold the eligible interest assets and or collateral you have deposited with blockchain.com. So basically, this is them telling you that they own your private keys in order for you to get a little bit of interest. If the losses exceed blockchain.com's balance sheet, you authorize blockchain to use eligible interest assets and or collateral deposits with blockchain.com to absorb the remaining losses. They are not insured. Beautiful. And I think there was one more. Hold on. That's not the one I was looking for. Nope. Nope. Oh, that's the SegWit stuff. Okay. There was something else about rehypothecation. I thought it was here. I thought I read that. Maybe I'm wrong. Could have been something else. Something about, hey, you give us your Bitcoin and we're going to rehypothecate off that Bitcoin. Yeah, so it's going to happen. It's going to happen. Yeah, you know what? I gotta get moving on the Understanding Bitcoin series. It's so freaking important. And meanwhile, all I do is watch the S&P 500 frustrate me. Thank God I was out of my short on it right over here, back here. All right, guys. That's it. I gotta get some work done. Thank you so much for watching, and I will see you all on the next one. Please like, please subscribe, please support, and please share. All right. See you all later.